Hi traders, Gavin McMaster here from Options Trading IQ, bringing you a video collaboration with Barchart. And today we're looking at how to trade broken wing butterflies. Just before we start, a quick reminder that everything discussed is for educational purposes only, is general in nature, and does not take into account your personal circumstances. So welcome to today's video, where we'll dive into the art of trading broken wing butterflies. This unique option strategy offers traders a flexible and asymmetric approach to capturing profits in various market conditions. Whether you're new to options trading or looking to expand your trading toolkit, understanding how to effectively trade broken wing butterflies can provide you with valuable opportunities in the financial markets. So let's jump in and explore the intricacies of this versatile strategy. So what is a broken wing butterfly? A broken wing butterfly differs from a regular butterfly because it has unequal wing widths. Because of the asymmetric nature of the trade, broken wing butterflies result in a skewed risk to reward profile. Some people refer to a broken wing butterfly as a skipped strike butterfly. Why would we use a broken wing butterfly? Well, a broken wing butterfly aims to profit from small movements in the underlying stock while reducing risk on one side of the trade. The ideal scenario is the stock closing right around the short strike at expiration. The trick is we don't want the stock to get there too early. For this video, we'll be focusing on broken wing butterflies using puts, but they can also be done with calls. A broken wing butterfly with puts is usually created through buying a put, selling two lower puts, and buying one further out of the money put. An ideal setup of the trade is to create the broken wing butterfly for a net credit. In this way, there is no risk on the upside. The main risk with the trade is a sharp move lower early in the trade. Setting up a broken wing butterfly. To set up a broken wing butterfly, we first buy a put option. Next, we will sell two put options with a lower strike. Finally, we skip a strike and buy one final put. So let's look at an example with Netflix trading at $614. To set up a broken wing butterfly, we could buy one of the May 17 590 puts, and that's trading at about $23.10. We could sell two of the May 17 570 puts at $16.15, and then we could buy one May 17 530 put at $7.15. The net credit received for placing that trade would be $205. So we keep that premium. If all the puts expire worthless, let's say Netflix stays above 590, everything expires worthless, we keep the credit, and that's our profit. Notice with our strike selection that the middle put is $20 from the upper strike and $40 from the lower strike. So this gives the trade its asymmetric risk profile. So let's take a look. This is the risk profile of the broken wing butterfly on the day of initiation, April 1st. So you can see here what the trade looks like. We've got a profit zone between about 550 and 590. Above 590, that indicates our credit. That blue line there is the profit and loss at expiration. So you can see if Netflix ends above 590, all the puts will expire worthless, and our profit is equal to the premium received of $205. The purple line is what's called a T+0 line. So that indicates how does the trade look as of today. So you can see there's a little bit of risk on the downside early in the trade, even though we do somewhat want it to get into that profit zone around expiration. We just don't want it to get in there too early. So let's move forward and see how the trade might look on April 30th. So you can see here that purple line, we've moved forward 29 days. And you can see the trade's doing really well at any price above about 570. So for the first few weeks of the trade, if the stock is fairly flat or slightly higher, we're going to do really well. And then we've got the potential to end inside that profit tent around May 17th. In terms of the Greeks, a typical setup like the Netflix example, we'll start with positive delta, negative vega, and positive theta. So positive delta means it's got a slightly bullish exposure. It's going to do better if the stock rises. Negative vega means this trade's going to do well if volatility drops after we enter the trade. And positive theta means all else being equal, it's going to be making a little bit of money each day through time decay. Let's take a look at managing a broken wing butterfly after we've entered the trade. So a good rule of thumb for a broken wing butterfly trade is to set a stop loss of 10%. Now that's 10% of the maximum loss, not 10% of the premium received. So there's a key difference there. Otherwise, another good rule of thumb is to close the trade if the stock breaks through the lower break-even price. You can see that there on the risk graph, just below 550. If the stock gets through that level, we want to close out pretty quickly so that we don't suffer a full loss on the trade. Risks of a broken wing butterfly. The main risk with this style of broken wing butterfly is a sharp drop in the stock price early in the trade. We can handle the stock price dropping as long as it doesn't drop too much and as long as it doesn't happen too early in the trade. For this reason, it's essential to choose a strong stock in a solid uptrend. Position sizing is also important, with most traders risking no more than 2 to 3% of their account on each trade. Stop losses can also help prevent large losses if the stock begins to drop. Traders also need to be aware of early assignment risk. While this can happen at any time, it tends to only occur when the short puts are in the money and have very little time premium remaining. So the risk is fairly small, but just something to keep in mind if the stock falls below the short put strike. How to find broken wing butterfly trades. Here's a screener that I like to run on barchart.com to find broken wing butterfly candidates. So I want to look for stocks with high call volume. So over 5,000 total call volume is going to give me highly liquid stocks. I've got a filter there for market cap over 40 billion as well, just to filter out any small cap stocks. And then I'm using a 20-day moving average signal. So I'm going to try and find any stocks that have broken above that 20-day moving average. They could be good bullish candidates, hopefully stocks that are going to either stay neutral or rally a little bit. So definitely we don't want to be looking at stocks that are in downtrends. We want stocks that are looking like they'll be in an uptrend or at worst stay sort of flat to slightly lower. And here are the results from April 1st for that particular screener. So you can see here lots of highly liquid names. This was how I found the Netflix example that we just looked at. In conclusion, broken wing butterflies offer traders a versatile and dynamic strategy for trading strong stocks. By understanding the mechanics, payoff diagram, and risk considerations of broken wing butterflies, traders can utilize this strategy in most market conditions. I would encourage you to start using Barchart Stock Screener to find stocks to use in broken wing butterfly trades. Thanks for watching and have a great day.